Are you ready for a dividend quickie? Hey, welcome back, my fellow investors. It's me, ET, and the purpose for these dividend quickie videos is to give you some quick information on these dividend companies, go over the pros, the cons, and try to do all of this within 6 minutes. And today's video is on Invesco Mortgage Capital, IVR. So let's take a look. Invesco Mortgage Capital, IVR. I tell you what, I got into this stock back in April of last year. My cost basis is around 280, 290. And this stock overall has been a very, very good player for me for a lot of different reasons. Didn't pay much in the form of dividends last year. However, I actually got into IVR to write covered calls on. This is an optionable stock, so I wrote covered calls on it. Last year, I was able to generate about $2,200 in writing covered calls on IVR, and fortunately, I didn't lose any of those shares. So now it's a staple now within my dividend portfolio in my Roth IRA account. With IVR, you get all the perks of a REIT because it is a REIT, a real estate investment trust. And all the perks are things such as, the REITs have to follow that rule of 90, which means that they have to pay out 90% of all of their taxable incomes to their shareholders. With that, you're going to get a high dividend yield. If I'm not mistaken, IVR is about 10% annual dividend yield. You're in the real estate game. And with this particular stock, I believe that there's more upside potential when it comes to capital appreciation or the price of the stock, and also dividend growth. I think there's a lot more upside potential than where we're currently at. And when we get to the chart, I'll show you where I get that information, how I came to that conclusion. Now, some of the cons when it comes to IVR, it is in the real estate sector. So if the real estate sector takes a hit, so will IVR. No ifs, ands, or buts about it. We can't get around it. But keep this in mind. IVR is focused on residential mortgage-backed securities. In other words, their securities is government-backed. They have the U.S. government backing them up. So keep that in mind. So even if it takes a hit, realistically, it's probably more of a time to add to your position. Let's take a further look into IVR. Here's the summary page for IVR. We see that it's at $1.58 currently. A couple of things I want to point out here. If we scroll down, we see that the short interest is at 17%. That's below 20, which is a good thing. Institutional investors at 49%. We see over here that their forward PE is 8.86. So that tells you that within the next 12 months, they plan on being profitable. You're looking at a 10% annual dividend yield, pays out quarterly. And right now they're on track for 36 cents. However, I think that is going to start to increase. And the reason why I'm saying that is if you go back over here, this is a 1-year chart, but take a look at this 3-year chart. 3-year chart. Look at that. Everything was above $12.50 before CV19 hit. And when CV19 hit last year, look what happened, pie out. And from there, it's been really just trading above that $2.50 to $5 range that whole time. But I can tell you that as their revenue starts to improve, you're going to see an increase in their dividend. And as their dividend increase, you're going to see an increase also within that stock price. Just to prove my point, let's take a look at the 5-year. Once again, I think that it's going to get back to these levels here. It's going to take some time. It's not going to happen overnight, but we're inching up that way. And that's why it became a mainstay of my dividend portfolio in my Roth IRA account, because I honestly think that it's going to get back to that 1250, above 1250, along with the increased dividend payout. So I'm definitely looking forward to that. Now let's take a look a little bit more at the dividends, just to kind of solidify everything that I've already said. Once again, here we go with those dividends. As you can see, what happens in the history. You know, it looks like from 2013 to 2016, the dividends were going down. You see 15% here, drop 15, 13, 6, then all of a sudden started going back up. 2, 3, 10. Then all of a sudden CV19 hit, and we see a 92% drop in the dividends. Things are getting better, and as things get better, the price is going to increase, the dividend is going to increase, and we'll be back on the easy street. So I would tell all of you, anyone that's interested in IVR, definitely do your due diligence. Take a look at the fundamentals, take a look at the technical analysis, and definitely go to their website and take a look at the information that's here. So there you have it. Go ahead and check out IVR. Make sure that you do your own due diligence, and always remember, save, invest, apply what you know, because knowledge is not power. It's the application of knowledge that's power. I'll see you guys on the next video. Bye-bye.